Ladies and gentlemen, Panda Trader here. Today I'm gonna show you how gold is moving. Okay, let's dive into it. First, I want to show you the news coming out later today. The Canadian GDP report, the United States Employment Cost Index, and the Chicago PMI. After that, the revised University of Michigan Consumer Sentiment and Inflation Expectation reports. All of that lands in the next few hours, and it can move the dollar. And when the dollar moves, gold moves with it. Second, I'll walk you through my analysis for gold. Here's how we do it. First, we find the main bias of the day by jumping into the daily chart and making the daily higher high and the daily lower low. After that, we jump into the 4-hour and 1-hour charts to find liquidity, the zones where funds and banks put their limit orders. Finally, we look for a confirmation signal before taking a trade. Okay, let's get into it. So, quick recap of where we've been. Gold has been in a strong downtrend since the top back in March, when price traded above the $5,400. Since then, we have seen lower high after lower high, dropping all the way down into the $3,900 to around $4,000 area in the middle of July. From there, price found buyers, and over the last couple of weeks, we have been building a bit of base, bouncing between roughly $3,960 and $4,180. Right now, we are trading around $4,078, sitting right in the middle of the range. So today is really about figuring out which way this range is going to break. Now let's look at the calendar for today. A lot of it already came out this morning. The Bank of Japan kept its policy rate under 1%, and that report already passed, so we don't need to worry about that anymore for gold. What matters for us today is the United States dollar. At around 7:30 p.m. we get the Canadian GDP report month-over-month number. That's one much high impact. Then at around 8:45 p.m. we get the United States Employment Cost Index and the Chicago PMI. And the big one at around 9 p.m. is the revised University Michigan Consumer Sentiment number, along with the revised inflation expectation. Inflation expectations are a big deal for gold because gold tends to move opposite to the dollar when inflation expectations shift. So keep an eye on the clock tonight, because these three events back to back could easily push gold out of the range we've been sitting in. Let's zoom out to the weekly chart first, just to set the stage. Last week, gold made its high a little above the $4,180 and its low at around $4,050, closing the week right near where we are now, around the $4,076. So last week was really a quiet, sideways week after all the selling we saw earlier this year. For this week, I'm expecting more of the same, a choppy back and forth week, unless one of tonight's news events really breaks the range. Okay, moving to the daily chart. The most recent swing low was down near the $3,960 back in the middle of July. The most recent swing high came just a few days ago, up to the near $4,160. Since we are trading below that recent high but above the recent low, my daily bias is neutral to slightly bullish for now. We are basically in the middle of a fresh trading range, and I want to see which side gets broken first before committing to a direction. Now here's where we really dig in, the 4-hour chart. Going back to around July 19, gold made a low near the $3,960, and from there we got a strong rally up, a clear breakup structure to the upside, pushing on the way up to about the $4,160 by the July 23rd. That's a big move, and it flipped the short-term structure bullish. After that high, price pulled back down to around $4,020 by July 26th and 27th, then rally again into a new high near $4,110 on July 30. So what we have here is a series of higher lows, 3,960, then 4,020, and price still respecting that upward path. Right now, we are pulling back again from that July 30 high, and we are sitting around $4,078. As long as price hold about that $4,020 right now. The 4-hour structure stays bullish in my eyes. If we break clean below it, that would change character and I start looking for more downside instead. Let's drop down to the 1-hour chart because this is where the real detail is. Going back to around July 20th and 21st, we got a clean breakup structure to the upside and price rally hard, pushing on the way into a zone between the 4,141 and roughly $4,163. I've marked that horizon as an order block because that's where the big rally started to stall and where I believe banks and funds were sitting with sell orders. After tapping into that order block, we got a change of character and price run over. And honestly, we have seen the same change of character played out several times since then. Each time, price rallies, tap a level, and then rotates back down. The most recent was around the July 29th, when price dropped sharply into a fair value gap, sitting roughly between $4,000 and $4,020. That gap is basically an area where price moves so fast it left an imbalance behind, and often price likes to come back and fill that gap before deciding on its next direction. Right now, price is sitting at $4,075, right between two important levels, the resistance at $4,087 just above us, and another resistance at a bit higher at $4,120. Below us, the first support is $4,060, and the biggest support zone down at the $4,000, right into that fair value gap. Based on the way price is run out here, it looks like a bounce toward that $4,087 to $4,120 resistance area is possible first, followed by a drop back down toward the $4,000 to $4,020 target zone. So let's talk about the sell side. My nearest resistance is $4,087, and just above that, $4,120, and above both of those, that big order block between $4,141 and $4,163. The price rallies up into the $4,120 to $4,087 zone, and I start seeing rejection, long wick closes. That's my cue to look for a short-term sell, targeting a move back down toward the $4,060 first, and potentially all the way down into the $4,000 to $4,020 fair value gap. That lines up with both the 4-hour pullback structure and the 1-hour supply zone, so that's a nice confluence for a sell. Now for the buy side, your price instead pushed toward down the $4,060 and holds. That's a spot where I watch for a short-term bounce back up toward the $4,087. And if we go deeper into that $4,000 to $4,020 fair value gap, that's actually my stronger buy zone for the day, since it lines up with the bigger picture support and the gap fill idea. A reaction there with some kind of bullish signal would be my best short-term buy opportunity. Now let's talk about tomorrow, August 1st. My main scenario, based on everything we have covered, is that gold continues this range play, testing the $4,087 to $4,120 resistance zone first, getting rejected and rotating back toward the $4,000 to $4,020 support zone. That's the path I'll be watching for first. The reverse scenario, if gold instead breaks clean above that order block, about the $4,163 with strong momentum, that would flip my short-term bias bullish, and I start looking for continuation back up toward the last week's high, near $4,180, instead of the drop I just described. So really, that's $4,141 to $4,163 is the line in the sand for me tomorrow. Just a reminder, all of this can change fast tonight with the Canadian GDP number at 7:30 p.m., the United States Employment Cost Index and the Chicago PMI at 8:45, and the revised consumer sentiment and inflation expectation at 9 p.m., we could get a sharp dollar move that pushes gold straight through one of these levels before the technical picture even has a chance to play out. So stay flexible and don't force a trade if the news breaks the structure. And of course, none of this is financial advice. This is just how I read the charts for myself. Always manage your risk, always use a proper stop loss, and never risk more than you are comfortable losing on any single trade. Markets can move fast, especially around news, so protect yourself first. Alright guys, that's the full plan for gold today. If this breakdown helped you to see the market a little clearer, do me a favor and drop a like. It really helps the channel grow. And if you want the daily gold analysis just like this, hit that subscribe button and turn on notification so you never miss a move. Trade safe, manage your risk, and I'll catch you in the next video. Panda Trader signing off.